name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's a daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bullish white soldier yesterday, and a more than suitable follow-on to the previous session's counter-to-the-counter bullish thrusting pattern type. The market continues to be rebuffed in any declines by the combination of the February and March lows from 2017 at 104.92, as well as, and perhaps more importantly, by the recent crossover last week of the previously highlighted lower time, currently 103.97, of the original January to May 2021 bearish Andrews pitchfork, and the middle time, currently 103.38, of the steeper and more recent mid-February to end of March bearish Andrews pitchfork. It is worth remembering a few things here. These two pitchfork tines may have helped in halting the decline, but they are still bearish, so it would not be unexpected to see a resumption of the move lower in due course. Additionally, they are splaying away from each other, so that their combined force, greater than each counted individually, will be weakening as time goes by. Hence, by next week, I suspect it would only be their individual forces that will be available. So far today, a move up and a rejection of the overhead 2020 low at 106.35, though it is not that much of a rejection as yet. I'm mindful that the upper time, currently at 107.02, of the previously mentioned steeper mid-February to end of March bearish Andrews pitchfork is now rapidly approaching from above, bolstered as it has been since mid-April by partnering with the declining short moving average, currently 106.98. This upper time is the one to watch. Cable, aka sterling against the US dollar. A key reversal up yesterday, the market breaking up and away from the congestion between 124.78 to 125.09 that contains within it the 38.2% Fibonacci line of the March 2020 to June 2021 move at 124.89. The market then moved up within a fairly clear area, with the next noteworthy resistance overhead, the September 2020 low, at 126.72. Thus, it seems that after last week's drops, so far this week the market has just not been ready to continue the move lower. Overall, recent action has been a continuation of the move down from the recent late February to mid-April descending triangle pattern. The initial target X for this pattern is in the 126.55 area, and that's already been achieved. However, the market stopped short of testing down to the harder secondary target X1 in the 123.60 area. So far today, a seemingly strong reactionary move lower, eroding a lot of yesterday's action and looking like an immediate countering bearish harami right now, maybe even a bearish double as well. Euro sterling. A bearish double yesterday as the market reached up to the declining long moving average overhead, currently at 84.42, pierced it, but then rejected the move higher. Below, we still have the declining short moving average, declining medium moving average support, currently at 83.71, and the nearby rising short medium moving average, currently at 83.62. The bigger picture is still the same. The overhead declining September 2021 to date downtrend, currently at 84.76, may be becoming a greater influence on recent market actions, as it is seemingly standing in as a proxy for the upper downtrend line of a possible extended diamond pattern that's been in formation since the start of 2022. This has taken over from the previous pattern, the very large falling wedge pattern, currently 84.76 to 80.99, which is still in operation and which I had detailed so many months ago. So far today, a reactionary move back up over the long moving average, and again approaching the September 2021 to date downtrend plus the April 2021 resistance at 84.70, and matching some of the highs from last week. US dollar against the Indian rupee. A second bearish black crow yesterday, but really it was a follow-on to the previous session's immediate countering shooting star pattern, type 1 bearish, as the recent hesitation, just over the recent 61.8% Fibonacci line at 126.43 and the June 2020 high at 126.39, gave way to a new bearish incentive. Prices dropped down through the lower time, currently at 76.32 of the January to April bullish Andrews pitchfork, and and as far as the recent 50% Fibonacci line at 76.20 before closing just under the lower time. This breach of the lower time and a 50% Fibonacci line now put both these patterns under threat. So far today, a strong, gapping, lower open, and a dip down through the rising short medium moving average, currently at 76.07, and only halting just ahead of the combination of support at 75.96, plus the recent 38.2% Fibonacci line at 75.98. Prices have since recovered, enough that they have crept over the 50% Fibonacci line, filling in a gap, but not as far as the lower time. Well, not just yet. They're still pretty close to it, but they haven't reached it. It's looking like a possible hammer pattern. We'll have to see on that. US dollar against the Brazilian real. A second bearish black crow yesterday, and follow on lower to the previous session's combined bearish double and bearish opening black Maribozo, possibly making the start of this week into a pipe top. Seems the overhead resistance of the 38.2% Fibonacci on the June 2019 to May 2020 move at 510.87, as well as the sharply descending medium moving average, currently 515.47, may have capped recent bullish ambitions. The second consecutive close below the important 50% Fibonacci line of the October 2019 to May 2020 move at 496.58 is further evidence of the pullback strength. However, the combination below of the short medium moving average, currently 489.71, and the seemingly more important 2021 low at 489.08 have halted the decline, but only just. Below these, we have the 50% Fibonacci line of the June 2019 to May 2020 move at 481.26 and the June 2020 low at 481.62. Overall, recently the market has moved away from trying all the way down to target X in the 444.20 area, the potential target area for the 2022 bearish halfway hesitation pattern. And it seemed that achieving something like 80% of the distance to the target area had been enough. Well, the last two sessions' actions, whilst not bringing that back to the fore, certainly revives my memories of it. Be interesting to see if the market will continue its very recent penetration lower. US dollar against the Mexican peso. A second bearish black crow yesterday, and a more than suitable follow-on lower to the previous session's immediate countering bearish engulfing pattern. This move and close lower, well below all the moving averages, as well as the odd-looking July 2021 to date shallow uptrend, currently at 20.0435. Overhead, we have a slew of resistances in no particular order. The long moving average currently at 20.4258, the medium moving average currently 20.4010, the neckline currently 20.4649 of the September 2021 to March 2022 head and shoulders top. Then the interesting 61.8% Fibonacci line of the July 2017 to April 2020 move at 20.6062. Finally, the upper time, currently at 20.6190 of the November 2021 to March 2022 bearish Andrews Pitchfork. Additionally, we also have, or maybe I should start saying had, targets X2 in the 20.4960 area and X3 in the 20.6605 area. These are not resistances, but primary and secondary targets for the late March to late April double bottom pattern. Target X2, the primary target, was achieved last week. Meanwhile, below we have the top of the previously mentioned double bottom formed from late March and through April, starting at just below 2020 even and stretching down to the 1971.68 support. So far today, a reactionary move back up over the shallow uptrend, currently at 20.0435, but seemingly stalling ahead of the short moving average, currently at 20.13 even. We're interested to see if the market is thinking about re-establishing itself as a possible bearish halfway hesitation, which it seemed to be doing prior to forming the double bottom over April. Thank you for listening. This short version of broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final part.